Welcome to Beyond the Money with Jackie Campbell. Jackie is a certified financial planner, CPA, personal financial specialist, and founding partner of Campbell Company Wealth Advisors and CPAs.
I'm always a firm believer that prior planning pays, and you're never going to get to something if you don't even know where you're at and what path you need to take to get there.
Get more at mycampbellandco.com. Now, because there's more to life than just finances, let's go beyond the money.
It's all powered by Campbell Company Wealth Advisors and CPAs. We invite you to reach out at any time. We have a representative standing by right now and throughout the weekend. 352-251-1015, mycampbellandco.com. My name is Marco, and Jackie Campbell, I want to jump right into it because I heard a phrase or a term, and I got to get your take on it. And many have called record highs on Wall Street a market melt up. Investopedia defines it as rising stock prices driven by investors following the opinions of others rather than fundamentals. Now, I want you to hear this clip from portfolio manager Scott Zelnicker, who tells Fox Business this melt up is far from over.
I've been doing this for 34 years. I've never seen a backdrop as strong as what we're looking at right now. We have the technology revolution, and we've entered a new chapter with AI. The second component is the Fed. We are now in the era of don't fight the Fed. And then the third is the roaring 20 setup we have. Deregulation, lower taxes, and improved productivity. Do you know since 1980, the Fed has cut rates 20 times with the markets within 2% of all-time highs. 20 times out of 20, the market was higher a year later.
Jackie, I'm coming out this weekend throwing hands. No, hey, how are you? Right to the information. What is a melt-up, and could it lead to a meltdown?
Yeah, well, the melt up it's a rapid, often emotional, sometimes it's not a financial reason, where prices are just fueled by the fear of missing out. And that's kind of what we're seeing all over again. Some other examples would be back during the dot-com in the late 1990s, before the run-up. In 2021. So it's all about, emotional reactions in the market. It's not necessarily based on statistics or based on the actual philosophy, if you will, of what a market cycle should be.
352-251-1015. And as we're talking about the market, and we've talked a little bit in the past about a potential recession, this volatile market. You can hear those conversations with the Beyond the Money podcast. You can find it across all podcast platforms. As we talk about a correction, isn't that just another way of saying a recession?
Yeah, that's exactly what that is. Yeah, 20% drop in prices. That's typically what a correction is going to be. We did have that earlier, briefly, right there in April of this year. But we kind of was fortunate. We had a real big U-turn. So those that didn't panic and get really emotional about everything, they were able to have that pullback and not the recovery, not just the pullback. But that's really, really it. But what we have to watch out for right now is just unsustainable valuations. We're reaching all-time highs, and the prices are rising faster than the earnings or the cash flow or the math reasons for stock prices to be going up. And all it takes is that extra the market being fragile, and one geopolitical issue, one earnings miss, one rate hike, lowering the interest rate should just help a little bit more, but panic selling can absolutely be the reason that we have this next big issue. And investor overconfidence. At some point, it's going to be smart, and I think now is the time to rebalance your portfolios. Make sure that you're not over-concentrated in one investment. Just because you've got a rising portfolio, it's probably because two or three different parts of that portfolio are rising at a much more rapid pace than the rest of it. So pausing, having that time, making sure that you're really grounded. It's kind of like getting ready for a vacation, getting ready for a flight. You want to check your list, make sure you don't have those over 3-ounce liquids in your bag, those little things that can slow you up when you get right there through security. Because I tell you, going through security at the airport is very much like what's happening when you go through the x-rays, when the market goes back, market pulls back, market goes down, and then you see, as they say, that when the tides go out, who's really prepared for this and who isn't.
So, and I know you don't have a crystal ball, and we always talk about it. You shouldn't try to time the market, but this time of the year, as we slowly start to wrap up, start to celebrate the holidays, get ready to flip the calendar to 2026, how historically does the market react to the back half of the year? Or market's not emotional, market doesn't care about what month it is?
Yeah, the market's not emotional. It's the people that are the emotion part,
Yeah.
right? And that's where that overconfidence, that psychology, the emotional investing, and the emotional reaction. I think that is what we kind of have to worry about at this point. And I don't know about you. I don't want a plan that's going to be based on the market. I want a retirement plan that's going to be based on my plan, my written plan of what I want to achieve. Scott and I as a couple, what we want to achieve, and what our timeline looks like. And that's what we do with that 360-degree retirement roadmap. It's not about what everybody else's goals are. It's not about the reaction, and the actual success of that plan is going to depend on the market. Like, let's make sure we're going to be successful, stressing the plan. And Mark, I have to be honest, there's some people that when I refresh their plan or I meet with them for the very first time and we start stressing their plan, like, somebody says they're going to spend $6,000 a month, they're probably going to spend a little bit more, especially in those early years of retirement. And, there's a disagreement. No, we're not going to spend money. We're going to stay right here. And then the spouse is like, no, we're traveling to see the grandkids in 3 different states multiple times a year. So it's about getting on that same page, but they get really uncomfortable when you stress their plan. But that is my goal as a fiduciary. I'm not just trying to get a plan that's going to follow the suitability standards, which, there's a lot of confusion on what suitability rules are versus a fiduciary duty of care. And I want to not only have a suitability is more when a financial advisor, typically, like a stockbroker, someone that does not have fiduciary duty, and there's a special license for that. And, while they're similar, it's really about if you're getting ready for a suit for a wedding that's coming up, suitability is going to make sure that financial advisor is going to make sure that suit fits. A fiduciary is going to make sure you look good in that suit and that it fits.
Like that.
So it's all about, who you're working with, who you're working alongside, because when you're in your early years, let's face it, it's about leaning in, growth, accumulation, knowing that our order of operations, just like the math order of operations, there is a definite sequence when you're on that growth phase, that accumulation phase side of the mountain. And then when you start coming down the mountain, that decumulation, when you're at retirement, when you're actually starting to enjoy that freedom of time and you want to have that freedom of money. And then you got all these other big things that can be happening, all these big things that can get in your way, taxes, inflation, long-term care, health care. Maybe you're not working as long as you thought you were. Whatever those things may be, let's have a plan for those. But again, don't base your plan, don't base the success of your future on the market. Let's make sure you have a written plan and that we're going to be able to put some guardrails in along the way. That is the key to a very successful retirement and a very happy retirement.
To reach out to Jackie Campbell and the team at Campbell Company Wealth Advisors and CPAs, we invite you to call at any time this weekend. You can call now. You can call a couple hours from now. We'll have a representative standing by. That number is 352-251-1015. But if it's on your mind, we invite you to call. And Jackie, are you still accepting the first-timers, the new appointments? Because there's somebody listening this weekend that said, as we flip the calendar to 2025, one of their New Year's resolutions was to either A, start customizing a retirement plan, or B, get that second opinion because they've been working with a big box firm. And now look at it, we're almost at the end of the year. They still have time to get that New Year's resolution taken care of. So do you still have time and space to talk to somebody for a first-time call?
Yeah, with our team here at Campbell Company, there's several of us that will be able to have those conversations and definitely get you on the calendar this year. But the calendar is filling up because we take time off. Our team works very, very hard all year, and we take time to celebrate those holidays, those important times with our family. So we definitely have some time coming off. And the way Christmas is falling this year, I know we got a little bit extra, a few extra days there, which will be nice. But definitely giving us a call now. There's no better time than right now when the market's up, when the market's reaching all-time highs, to make sure that your plan is going to be successful, no matter what happens. Because guess what? The market will come down. It's either going to come down on a day that is not going to be a good thing for you, or it's maybe going to do a little bit more of the bouncing. But there's definitely the typical market indicators are not necessarily working. They haven't worked for a few years because of all of the cash infusion by the government, trillions of dollars since the COVID shutdown, that is making a change in today. And guess what? With all these other things, the China, the tariffs, all these things, they've worked out in our favor here in America. And other countries are starting to do better as well internationally. For the market perspective, but interest rates going to be coming down again. Hey, that's going to have an impact. But why not make sure that you don't have too much risk in any one over concentration of a stock or a sector? And we're seeing that a lot with technology. Yes, it has done phenomenally well, but what's going to be next? That's really the key. It doesn't matter what's happened in the past. Appreciate what you have, be grateful for what you have, and what tweaks and adjustments should we make so that you're prepared whenever that time comes. And you still want to have income, you still want to have growth, but you don't want to have lazy money either. Having money in the bank can be lazy money. Every time those interest rates go down, you're earning less and less. And I know the Social Security Administration said that they're looking at about a 2.7% cost of living increase for this year. I don't know about you, Mark, but where I live, where I shop, what I spend money on, it seems to be a little bit more than 2.7%. So you want to make sure that you're keeping up with inflation and that you're not too over-concentrated in any one position.
Nothing wrong with asking the question to Jackie Campbell and the team at Campbell Company. Where do I stand in my portfolio, my journey towards retirement? That initial consultation, no cost, no obligation. It's a 360-degree retirement roadmap. And with multiple locations, they can meet you at a time and a place that fits your schedule. Or that initial consultation can be via Zoom, via phone, whatever's more convenient for you. Again, that number, 352-251-1015, mycampbellandco.com. All right, so Jackie, on the website, benzinga.com, they listed the moves that could destroy your retirement account. Pretty dramatic right there. These moves will destroy you. I want to go through some of these and pick your brain and see if you agree, if you disagree, if there's a follow-up. So one of them says, thinking your 401k is a retirement plan. Can that be a retirement plan killer?
It could be. Depends on how successful you've been in the allocations. Depends on what sort of allocations. Typically, a 401k has very few selections for your investments, and typically there's not going to be a financial advisor or retirement advisor that's going to help you with your allocations. So you're just kind of, looking at your coworker there and saying, hey, what do you do? And it could be somebody that's talking about the market. Maybe they know what they're talking about. Maybe they don't. But having that independent advisor, that trusted advisor, with that fiduciary duty of care to help you pick your plan, pick your allocation, but leaning into it. I mean, it's kind of crazy because a lot of people think that a 401k is going to get them through retirement. And when you look online at your employer, it's saying, oh, this is going to give you X dollars in retirement and you're going to live, it'll cover you till age, 86, 87. But it's making a lot of assumptions. It's assuming you have no debt. It's assuming that you're going to be able to live within that amount of income that's going to be able to be generated on that. And it's assuming that the market is going to be average from here on out. It's going to be able to not fail in the future. And that is really... Relying on a number is not a plan. Relying on the market and the success of the market is not a plan. That's kind of like hope. You want to make sure that we test the numbers, do the math. It all comes down to the math. And many people, Mark, have done such a great job saving, have a lot of money in their 401ks, have money in after-tax accounts. They have money in joint accounts. They have money in their Roths or their IRAs. But making sure and testing the plan and doing the math, that is really how you do a true plan. It's not about, green grass and high tides forever, like the song says from the Outlaws, from the late Huey Thomason. It's about making sure that you're going to be there when the tide goes out, when there's dark brown grass that we often see here, when we don't have enough rain because of all the extra heat and sunshine. So just making sure that you've got a tested plan, doing the math so that when you have that true freedom of time, that you're going to have that freedom of money as well. And that comes to how much you've saved, how much you're going to spend, and also all these other uncontrollable factors that come along the way. Inflation, taxes. I mean, do you think inflation is going to continue to go up? Do you think taxes are going to continue to go up? I mean, I do. So no matter what they say, with inflation, it's all about what you're spending money on that really matters, not the rest of the economy or the world or, anyone in your neighborhood. So test the plan, have a written plan, and being intentional would be my recommendation. And there's really and truly no better time than right now. If you look at the 4 seasons of a year, this is fall time. This is harvest time. We should be harvesting and making sure that, hey, have we done well this year? Have we set ourselves up and our families up for success? Have we done all these things? Are there any last minute year-end tax efficiency strategies that we should be reviewing? My goodness, if you're 65 or older, you better be paying attention because you want to take advantage of that extra $6,000 deduction for you and for your spouse, 65 or older. That is huge. Don't leave that tax dollar on the table, not one of them, the free tax dollars. And then the fall review meetings. Now's the time to review. How have you done? How are you balanced? Are you taking on way more risk than you should be or intended to be at this point in your life? Doesn't matter about the rest of the world. It's you. It's your life. It's your family. 2 more things that we would do this time of the year. Medicare open enrollment just opened. Make sure that you're using the right Medicare supplemental plan that you have, because guess what? I don't know if you paid attention, but the Medicare premiums for Part B and Part D are going up a good $20 a month per person at the minimum price. And if you've got extra income this year, then you have a whole nother nuisance tax, we call it, called IRMA, income related Medicare adjustment that may be coming in. So be prepared. Don't be caught off guard. Make sure that you're doing everything that you can to make sure that this fall you're going to go into that end of the year knowing confidently that you have clarity and you have direction about your own personal plan, no matter what happens in the market.
This is just a sample of the conversation that you'll have with Jackie and the team at Campbell Company when you customize your personalized 360-degree roadmap from Campbell Company Wealth Advisors and CPAs. 352-251-1015. Again, 352-251-1015 or online at mycampbellandco.com. Another item from the article that had the moves that could destroy your retirement account. This one, letting fear or headlines drive your decisions. I bet you see this every day, Jackie.
Absolutely. And, it's about that traditional wisdom meets kind of modern strategy, right? We always take a little bit of the past, the patterns, the facts, what we've seen happen in the prior years, and the years that, there was some really hard learned and hard won wisdom by financial advisors, by investors, and make sure that we're looking forward, not just to get caught up in the excitement of today, what's going on, how many thousands of percent one stock's going up, and then you look at the GDP and you look at the earnings and you're like, well, this doesn't math. What's really going on here? But being forward thinking, that's what we try to do here at Campbell Company. We try to use traditional wisdom here at Campbell Company, but we also try to use some combined modern thinking and modern strategy. And forward thinking as an advisor is not just listening to all the hype. It's not just listening to the hundreds of percents of return or 1,000% of return on a couple of stocks. It's about using this time, the euphoric feeling that everybody else has had, to make sure that your plan is rebalanced, to make sure that no matter what happens, you're going to still get part of the gains and you're going to be rebalanced when that happens. So when everyone else is super excited, that's when you should be starting to pay attention. Remember the old philosophy, the old adage about buying low and selling high. There's something to be said about that. And I'm not suggesting completely get out of the market, because if you do, when do you get back in? But it's based on focusing on a purpose-based investing. What do you need? How do you need to handle your financial affairs, your investing, and your tax planning, and maybe Roth conversions? These are great, great things to talk about right now before the end of this year. So don't wait. That would be my advice to you, because before you know it, you'll be into the next year, and whatever's going to happen is going to happen. Maybe it'll be a good thing when you look back. Maybe it won't be a good thing for you and your financial planning for the rest of your life. So give us a call, 352-251-1015, and get intentional about your plan.
All right, one more for you from Benzinga.com, the moves that could destroy your retirement plan: underestimating cost and fees.
Well, that's a big one, right? So fees are going to be a drag, and it's like not earning an extra percent. It's like not earning an extra 2%, 4%. I've seen some things that a client had recently, and they were still working, getting close to retirement, and they were paying 4% in fees. They were paying 1.95% fees in this mutual fund that they had, and they were paying a financial advisor 1.5%. That's a lot of money to leave on the table. So you have to make so much more to even overcome those fees. So always be aware of your fees. Sometimes, they just need to be worth it, right? Whatever you're paying, whether it's added peace of mind or whether it's performance, whether it's giving you an alpha to your return, whatever that may be. And another fee that I look at is taxes. Taxes is nothing but a fee. Who wants to pay any more than they absolutely legally have to? One dime more. No one ever.
Totally agree. And do you think that's one of the most overlooked? We talked earlier about the 401k, using that as your only source of income in retirement. Do a lot of people overlook the fees, or not quite understand what they're paying in the fees in a 401k plan?
I think that's it. They just assume that that's it. Even a 401k is going to have a fee. A lot of people think they're not paying a fee, but there are fees. If you have mutual funds, and if the symbol of the investment that you have in your portfolio anywhere in any of your assets, if it has an X at the end, it's pretty much going to be a mutual fund. You're going to be paying someone, a manager, to manage that mutual fund, whether you see it, whether it comes out of your balance, or whether it's all behind the scenes before the earnings ever come to you. So just be aware and just be educated about that. I think that's really the most important thing, right? When you go to the dentist, you don't want big surprises. You want to kind of know what that shocking bill is going to be before you get there, right?
Yep.
And, it's just, surprises after the age 14, as one of my dear clients told me and reminded me, typically not a good thing when you're adults and you're in retirement. So you want to be as prepared as you possibly can. So taxes, Roth conversions, taxes, the sunset didn't happen this year. That was a big thing that we've been talking about for 6 years now. So a couple more years at least, taxes are going to stay pretty much at the same rate. Plus, we got some extra deductions if you are 65 or older. And Roth conversions, this is an ideal time to talk about Roth conversions. Don't wait till you're 75, 85 to have those conversations. Let's talk about it now so you can get that continued growth, especially if you're in a position where you don't need what you've saved in all the dollars in your retirement accounts. Why not let them start growing tax-free? Because someone someday will pay tax on every single dollar in your 401k or your IRA, and it all comes with planning. You don't want to just rip the Band-Aid off and not understand what it truly means, not just for this calendar year, but for all the years to come. Understand the decisions that you're making, just like a business owner. Treat your personal finances just like anyone else would a business. That is how you become successful. That's how you stay in business for 2 and 3 decades. It's by paying attention to the top line, to the bottom line. It's not just how much you've saved for retirement, and not how old you are and how many years of service that you've put in. Be intentional. That has been my word of this year, and it will go out of the year being my favorite word for 2025. So if any one of these things are coming to your mind and you have any questions, give us a call. We'd love the opportunity to talk with you, 352-251-1015, or you can go online at mycampbellandco.com.
Now, the Beyond the Money tip of the day.
Lazy money. I had someone come in the office this week, and that's exactly what they said. We don't want lazy money. We've heard you talk about this for months now, Jackie. And as the interest rates start going down, they're anticipating another rate cut. That just means that you're going to get less on your emergency fund and less on your earnings. So let's not let too much of that lazy money sit around. So be proactive, making sure that you're getting the best return for those dollars that you're not going to be spending in the next 3 to 6 months or a year. Let's make sure that we have your money allocated properly in those 3 buckets for now, soon, and later, for liquidity and not have to worry about sequence of returns risk. And if you don't know what that means when I say sequence of returns risk, it's one of the greatest risks in retirement. So give us a call. We'd love the opportunity to talk with you about it a little bit more, either lazy money or sequence of returns risk if you're taking on too much risk and you're about to retire. And, I reflect back to 2000. That was probably one of the worst times to retire. At the end of 1999, everyone was worried about Y2K. Everybody was worried about the computers, and everything was going to completely shut down in all the financial and business world. And guess what? It ended up being probably the worst time in history to retire, because there was not 1, not 2, but 3 years of negative returns in the stock market back to back to back. That was a horrible time to retire. So we never know what's going to come next. We don't want to know what 26, 27, 28 is going to be just yet. Let that not happen to you. Let's have a plan. Let's be intentional with a 360-degree retirement roadmap customized just for you. 352-251-1015 or online at mycampbellandco.com.
A little bit earlier in the show, we were talking about some of the moves that could destroy a retirement plan. And it's not noted in here, but I've heard you say it before, that one of the biggest killers is procrastination. I'll get to it next month. I'll get to it next year. Procrastination. Now is not the time to sit on your hands and go, well, let me get through the holidays, then I'll call Jackie. If it's on your mind, we invite you to call today. 352-251-1015. We have a representative standing by right now to talk to you. They'll be there throughout the afternoon into the evening as well. 352-251-1015 or online at mycampbellandco.com. Jackie, thank you, as always. Thank you for the education and the information this weekend. Get more of the Beyond the Money podcast. You can find it across all podcast platforms or at the homepage of mycampbellandco.com. We're back next weekend, but before we get out of here, let's give you the final word.
If you're looking for clarity, confidence, and direction, whether you're about to retire or have been retired and enjoying that for years, now's the time when everything is really good, right? When the market's up and your all-time highs, you're feeling like you're accomplishing something, feeling like you're going to be successful. Let's test the math. We'd love to do that. Look at your 360-degree retirement roadmap customized just for you. Give us a call, 352-251-1015, or you can go online at mycampbellandco.com. This is Jackie Campbell, certified financial planner and certified public accountant of Campbell Company Wealth Advisors and CPAs. Join us again next time on Beyond the Money Radio and the Beyond the Money podcast.